Hello and welcome to this Forex Preview at XM.com. I'm Maria Pachardis, and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing U.S. data and the outlook for the dollar. So, Marios, it's going to be a busy week in the States. Fed Chief Powell will give two separate testimonies on Wednesday and Thursday. Is he likely to say anything new, given that just a few days ago he signaled that the Fed will hit pause for a while?
I very much doubt it. And indeed, he was really clear at the last Fed meeting a couple of weeks ago. We've cut rates 3 times. We are going to take a step back now, monitor the economy, allow this stimulus some time to work. And obviously, if in the meantime a shock hits the economy, we'll cut again. But we don't see any real need for that right now. Nothing substantial has happened since that meeting 2 weeks ago. So it's very difficult for him to deviate from this narrative. So I would expect him to more or less repeat that the Fed is on hold, we are comfortable with policy where it is right now, and so on. Now, as far as the market reaction is concerned, we might see a slight positive reaction in the dollar if he manages to hammer home the point that the Fed is firmly on hold, but I don't think that any upside will be massive. And the reason is, the markets already don't expect the Fed to act over the coming months. The probability for a rate cut in December is almost 0, and the probability for a rate cut by March is roughly 1 in 3, the likelihood rather, is roughly 1 in 3, which is still relatively low. So the point is, there isn't much for the market to price out in terms of rate cuts right now.
I see. Also on Wednesday, we'll get the latest CPI inflation data for October, and on Friday we'll get retail sales data. Are those likely to be more important for the dollar, and what's the outlook for the currency?
I very much believe so. I think that the retail sales, especially data, will be the most important ones. Now, the US consumer has really been holding up the economy this year. Investment has softened as a result of the trade war, but consumption has remained solid, and that has been keeping US growth supported. Now, it will be interesting to see if the retail sales data on Friday confirm that. And as far as the dollar is concerned, I would say that the outlook is positive. And the argument is this: the US economy, even accounting for the recent slowdown and the weakness in manufacturing and so on, it's still much, much stronger than either Europe or Japan. Likewise, interest rates in the US are much higher than both Europe and Japan. Now, that means that there's no real alternative to the dollar right now. It offers much more attractive interest rates, and it's a reserve currency, so it has safety as well. Now, for that to change, for me to be able to call for dollar weakness over the long term, I would either need to see the Fed cut rates much more aggressively than it has so far, or Europe unveils a substantial fiscal stimulus package. Now, I don't think either of this is likely to happen over the coming months, so I think it's going to be a good period for the dollar, let's say.
Marios, thanks so much for joining me. Thanks for watching at XM.com.